Alright, now that we have the differences going on here, let's start doing the operating activity section for statement of cash flows. So first thing we're going to begin with is net income. That's first order of business. With the indirect method, we start with net income, and then we're going to come up with anything that is non-cash in the income statement that we have to adjust accordingly. So what's my net income? Way down here at the bottom, you can see that just on the edge of the screen. Slide that over. $6,000, okay? So net income is $6,000. And then I've got to add anything that's non-cash. And what I mean by non-cash is anything that was a transaction that had no cash value to it. And as I go through here, cost of goods sold, depreciation expense, salary expense, rent, insurance, interest, utilities. Okay, salary, rent, insurance, interest, utilities, all of these had something to do with the passage of money to some degree or another. But this one right here, depreciation expense. Here's the key, folks. Think about this for a second. When you're doing the journal entry for depreciation expense, this is what you do. You go a debit to depreciation expense for some dollar amount, X, 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 and then the credit goes to what? Cash? No, it goes to accumulated depreciation. There, X, X, X. So that's your journal entry. Debit depreciation expense, credit accumulated depreciation. Do you see cash anywhere in here, folks? Is there cash anywhere in this transaction? You better say no, because if you don't, ooh, I'm going to have to take you outside. We're going to have a conversation about this. Alright, so think about it for a second. When there's no cash, when did the cash happen? Well, it happened when you originally bought the particular asset. That's when it originally happened. Okay, when you first bought the asset, that's when cash happened, and then you take the cost of that asset and distribute it out over several years. And that's what this function is for, is to distribute the expense, not the cash, the expense. Two totally different things. Okay? So depreciation expense is a non-cash entry, and since it's being deducted from my net income, I need to add it back in. So I'm going to add back depreciation expense. For $12,000. And now my net income is up to $18,000. That $18,000 basically is what it's worth on a cash basis. So I'm just going to put here net income in parentheses cash basis. It may not be the truest, but it's pretty darn close, okay? Alright, then I go through my current assets and my current liabilities and I start trying to figure out what's what. Okay, I can just go straight down the line if you want, because I already know what's an asset and what's a liability because I've already labeled everything. So let's do that. Starting with accounts receivable. If accounts receivable went down $200, it decreased by $200, what does that mean? Well, if it went down, it means I collected cash, right? Because accounts receivable is potential cash coming in, but it hasn't come in yet. But it will, but it hasn't yet. But it will, but it hasn't yet. But it will, and it has, by the way. We got $200, okay? And that means an inflow of cash of $200. Okay? Inventory increased by 440. So if it increased 440, that meant I bought more inventory, right? So if I bought more inventory, isn't that the same thing as a cash outflow? I hope you said, yes, Mr. Hamilton, yes, it is. Yeah, and it is. It's an outflow of $440. Okay, negative. Accounts payable went down $200. What does that tell you? Accounts payable is a liability. You owed somebody and then you paid them $200 because accounts payable went down. That meant that you paid off some of that accounts payable. $200 worth. Isn't that an outflow? Because you paid off some of your bills? Yes, it is. It's an outflow. Because you paid off some bills. Okay. Next one. Salaries payable. Increased by $180. What do you think? $180. Was that an inflow or outflow when you increased it? Well, that simply means you held off paying your employees, didn't you, by holding on just a little bit more, by holding off a little bit more. Isn't that the same thing? It's kind of like a cash inflow, inferred to be a cash inflow? Think hard. Think hard. If you went from $700 and now you're up to $880, then that mean you got to hold on to some money because you didn't do payroll just yet? That meant you hold on to money, so that implies a cash inflow. Okay? So that is a positive. Utilities payable. Increased by $60. What do you think? I owed this much and I owe more. Isn't that the same thing as borrowing more money from your friend? Yes, it is. So that's an inflow of $60. So it's going to be positive. Prepaid insurance. Now we're back to assets. So shift gears again, okay? Prepaid insurance. It went from 280 to 260. So it decreased. Okay, this was an asset, which meant that you used up some of the insurance, right? Now, this was the same thing as if you had paid something up front and now you have less that you paid up front. Is that kind of the same thing as an inflow, or is it an outflow? Which do you think? It went down, so kind of like with accounts receivable. When accounts receivable went down, that meant that you collected cash. Same thing with prepaid insurance. Another way to look at it is I have less cash tied up now. I had this much tied up, now I have this much tied up. That infers an inflow. So I'm going to put that down as positive 20. And then next I have prepaid insurance, prepaid rent, sorry. And that went up $40, okay? So if that went up $40, what happened? I had this much, now I have this much. I used to have prepaid rent of $180, now it's prepaid of $220. That means I paid more for prepaid rent. That means I am out that much more money, $40. I'm out that much more money. So is that a good thing? No, it means that I just spent more money, right? And that is an outflow of cash. Folks, does this make sense? So if I start with 18,000 and I go plus 200 minus 440 minus 200 plus 180 plus 60 plus 20 minus 40, I have 17,780. And that is my net cash provided from operating activities. So cash provided, whatever, by operating activities. Operating activities. Very short-handed here. Okay. Cash provided from operating activities, 17,780. There's your answer right there, guys. And that's all I had to do for the COC. I know, you're waiting for a second shoe to drop because the other ones have been a little bit longer. You're thinking, oh, there's got to be more to this. No, there's not anything more to do with this. Oh, but there's got to be more. No, there's not. That's it. That's it. That's all I had to do. Was that easy enough? Yes. Thank you very much. You guys have a good one. Take care now.